Will the double top at the 1788 area on the August gold chart be the high for the move?
No, this double top most likely will not hold. In fact, there's a rule of thumb that double tops seldom hold and triple tops, I have to say in quotes, never hold. Of course, there's always the exception. But in any event, this double top, I think, will be taken out to the upside, even though there appears to be very little inflation, but inflation could be coming around the bend with all of the central bank accommodation. In any event, this double top will be penetrated, I believe, to the upside with the next chart objective at the psychological 1800 level.
What can be inferred about potential future price direction when a market, any market, is higher on no news or mixed news?
Well, this is the case in stock index futures, which are showing very good gains today, even though we did have the new home sales report coming in at a rather weak number, and yet stock index futures performing well. So the rule of thumb is anytime a market can advance on negative news, that often is a sign that there will be additional strength, and I think that will be the case again in the stock index futures. So with what we're seeing today, how that market is responding to the news, I would anticipate some follow-through strength, at least in the short term, in stock index futures.
What is the outlook for the U.S. dollar?
Well, the dollar index is probably one of the most disliked trades as far as traders being on the long side. So I am very much in the minority, being a bit friendly to the dollar index. Interest rate differential expectations, in my opinion, appear to be bullish on balance, especially now with the ECB and other central banks likely to be more accommodative than the Federal Reserve. So that puts me clearly in the minority, liking the long side of the dollar index. Although it is lower today, it has bounced substantially from the June 10th lows. So look for recovery in the dollar index later this afternoon and in the days ahead. Strength in the greenback, I believe, is likely.
Corn and soybean futures are in an uptrend. Will this continue?
I really don't think so. I think that the market has added some kind of China premium in soybeans and maybe some weather uncertainty and firm cash basis in the corn. I think that weather is the key over the next 30 days, and NOAA recently came out and talked about above normal temps and above normal rainfall for most of the Midwest. Over the last 30 days, parts of the western Midwest has been drier than normal, but we did see some rains over the weekend, and these rains are moving to the east. So we expect crop ratings to hold somewhere around 70% good to excellent in corn and 72% in soybeans, which would give us an above trend yield, bigger crop. And if the demand continues to be under pressure because of the virus, you could see carryouts go up. University of Missouri recently came out and talked about cash corn prices this year at 306, soybeans 821, and the wheat at 460. Some people think soybean prices might even drop below $8 in the cash.
What is the latest on U.S. Midwest weather outlook and possible impact on U.S. summer crops outlook?
As I mentioned, NOAA came out with a 90-day outlook as far as U.S. summer weather is concerned. That is warm and wet. Our weather guy, World Weather, is looking for July to be drier and warmer than normal. It's not anything that we saw in the 1980s or 2012. But there could be some dry pockets to pop up, especially in the western Midwest and plains. And so we're going to have to watch that pretty closely. As always, when we come back to the 4th of July weekend, the weather forecast over the next 2 weeks will be key to prices.
What is the net managed fund position in grains and impact on prices?
Well, right now, they're short about 48,000 meal, 5,000 oil, 270,000 corn, and 30,000 wheat, and long 21,000 beans. Some people think that they have too much of a weather premium in corn and in soybeans and have taken a lot of demand premium out of the wheat market. The best trade over the last few weeks has been long corn, short wheat. And I think that over time, we're going to see the managed funds reduce their long position in beans and increase their short positions in meal, oil, corn, and wheat, as long as the weather's okay. We've also heard that China now wants to declare everyone who ships grain and meat into their country that is from virus free. Sounds like South America will go along with this, but maybe not the United States. And today, one of the U.S. meat plants was banned from shipping anything to China because the COVID virus was found in their plant. So this could be negative to U.S. demand to China.
The views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. If you'd like more information about our brokerage services, would like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.